Making his long-awaited return to Chart Request Live, Mr. Steve Straza. We missed you, man. How's it going?
So good to be back with you guys.
Good to have you back. It was Pat and I for a little while there. It'll be Pat and I again on Thursday, but we got you with us today. If you don't know what the show is, if it's your first time watching, that's okay. We love new viewers. This is the premise of the show. It's very simple. If you have a ticker on your mind, you want us to bring up the chart, we will do so. Just drop that ticker in the chat. If you want to cut the line in the chat, I encourage you to email us questions at stockmarketmedia.com. A few people have already done that, so let's get started. Steve, you ready?
Let's do it.
All right, let's start with this question from Fred. He's asking about ticker WEX, WEX. I admit this is not one that I am intimately familiar with. It is an $8 billion. Wait, is it a 3 or an 8? That's an 8. Okay. $8 billion payments company.
Have you heard of this?
No.
I've never heard of this one.
It's like corporate. What is this? It says corporate solutions. Okay.
Payment processing and information management solutions. Okay. Fleet solutions. Okay. It's like T&E expenses.
Yeah. Yes. This is what I'm gathering.
Got it. Professional services, business support services. Typically an industrial. Okay. Either way, interesting chart. Kind of been stuck in a sideways range for a long time now. Look, I forgot where all my tools are. I've been gone. But, rangy, right? For a while now. So really the upper bounds are at these former highs from 2021. Call it 230.
Yeah.
For tactical trade, you could get involved here at these pivot highs. Right. Confirmation at about 204. The base is still shaping up here.
All right.
Not bad.
Mark asked about HSBC. This is one that JC's owned for a little while. I mean, we've certainly talked about it enough. I don't know what more there is to say about it.
Look, it's can I throw on a moving average? This is a weekly, but typically just for, some basic trend identification, throw the 200-day on there. You can see this base has completed a good while ago. Here we go. You can probably draw resistance at a number of different levels here. Keep it simple. Something like that. Right, so really above 39.50, 40-ish. I would be targeting these old highs, about 55. So that's about 40% upside. This is the kind of stuff that you want to be in this market too, right? Cyclical. I like the international exposure that this gives you. I think developed Europe catches rotation and reasserts some of that old relative strength that we saw late last year. Yeah.
I mean, like, you can't argue with the chart, but for a while there, I had looked at this chart and I ignored the y-axis. And then you look at the y-axis and you see, oh my gosh, it's breaking out. It's gone up $4 in the last.
It doesn't move, right? That's a great point, Spencer. In this market, and I didn't get into the HSBC trade with them.
Yeah.
One simple reason why. Just like we had a conversation on the morning show yesterday about how, like, Bitcoin's not really a great vehicle for me.
Right.
I want beta.
Yeah.
Right. I want some sort of a levered play.
You want juice.
Right. And you've been hanging out with us long enough. There's a million patterns that look just like this that I could buy that give me that
right.
juice.
Right. Exactly. So yeah. JC likes to ignore the y-axis. Y-axis is important though. It tells you how much is going up. All right. What about every day now, Steve, since you've been gone, we get asked about energy stocks now. It's like a normal thing. So EURN, Euronav, which is
the shippers, right?
Yeah, shipper, right? Yeah.
Tanker. So this is a big oil tanker. These stocks have some massive bases. This whole space. I know there's more price history here, isn't there, Spencer? Maybe not.
Yes, there is. It goes back to at least 2003. Oh
Yeah.
no. Oh no. No, no. I'm still on HSBC. Hold on. No, there was no, I'm not seeing, no, it starts in 2015.
Do something like that. It's a monster base. I think with this, you keep it simple, right? You play some sort of a channel break here. This is a daily chart, not getting oversold pretty much all year. Early January, fine. Do something like this. Probably want to use a VWAP here. A great place to use a VWAP. They moved the VWAP. This isn't just me being jet lagged. They moved it. I came back from Asia, Spencer. I can't find Twitter on my phone. I don't know what a Threads is. I can't find the anchored VWAP on TradingView. I don't know, man.
I maybe you should just go back. I don't know what to tell you.
You mean that, huh? Yeah. Look, if you drop the VWAP, we're right there. You could draw a little, downtrend line too. Really, these pivot highs, 1675. I like this. I would think based on what we're seeing from energy futures, I'm very interested in looking for opportunities in the oil and gas space right now. This is one that I would have on my radar. Needs to prove itself a little bit here. This is like a buy on strength type of setup, but pivot highs 1675, 17. Yeah, I like it.
All right, Michael asked about MPC Marathon Petroleum. They had earnings this morning, so they're up $1 today on that.
Yeah, this is great. This is pretty clean too. Flip it to a liner. Boom. 136. Again, buy on strength type of setup. This one, the more you zoom out, the better it looks. Got a massive base breakout a few years back. Look at how that lines up, right? So this is the area. Probably not a coincidence that we ran all the way up to this 130 level, 130 and change, and pause, deeper correction. Now we're back there to the scene of the crime. That just so happens to be the first Fibonacci extension based on the 2018 to 2020 drawdown. So if we're above 130, like it long, next target's about 200. Key psychological level.
Those are always important. All right, Gerbier asked a question about Roku. And I'll read Gerbier's question and then I'll
Hey, wait, is that it for energy? We should do like one sector together, like as a theme.
that I think that's it for energy. Let me check in the chat real fast. Was there any energies that I missed here? No, I don't believe so.
All right.
All right. Roku, the question was, does it get more upside if it holds the 95 area? Well, we don't have crystal balls, Gerber, so we really can't tell you what it will do. We can only tell you what may be a good entry or a good exit. That's all we can really say. So anyway, Roku is up. It's having a very nice week. It's holding on to its earnings gains from last week. Very nice.
Good disclaimer there. And so I'm just going to presume we had a monster earnings beat Friday.
Yeah. Thursday after the close, yeah.
30%.
And yet, zoom out.
Yeah, no, seriously. So this one, look, despite the 30% ripper, I kind of really like to see that right here. I'll tell you why. This one's clean, and this is a fresh base breakout too. A lot of bases that have already resolved higher have gone on to hit price target 1, or in the best case is price target 2 already. This one is just now breaking out. You want to see, like, this is a major reversal pattern, right? It symbolizes a reversal in the primary trend. You want to see a very, what we call decisive resolution. Like, so if and when you get that breakout, which we just got on Friday on the earnings beat, I mean, it's a monster move up 30%. I'll pull in the 1-day rate of change here just to show. No, this is the 5-day, but I guess to make my point, this is an easy way to measure like a momentum thrust, right? Up here in the upper pane. So this is the biggest single day move in the history of Roku stock, except for the week it came public.
Wow.
Right? So that's what we would call, that's a major momentum thrust. If you look back here, they tend to happen at the beginning, early stages of new uptrends, right? These momentum thrusts. Just if you look at those from 2019. So again, very, very early stage stuff. This, new primary uptrend just started here a couple days ago. I think you could buy any and all weakness back towards the upper 70s.
Wow.
It's a nice chart.
This is fun when the charts are going up, isn't it? It's way more fun than when they're going down. Okay, to the chat we go. We got
Spencer, you make a great point, and that's why we have bull market shirts, right? They are more fun. We should have more fun.
Yeah. All right. H Chan's looking at MTZ Mastech, the construction and engineering, I guess conglomerate. I'm not sure what else you would call them.
So this is a great chart. This reminds me of this is very Caterpillar-y.
Yeah.
Let's see just how Caterpillar-y it is. Spencer,
pretty
Caterpillar company.
It's $9 billion.
Okay, fine. Yeah, so there you go. We're overlaying Caterpillar and Mastech. They're both industrial stocks. There you go, right? So both breaking out of these really nice bases within the context of, here's the important part, primary uptrends, right? These are just giant continuation patterns, right? Uptrend, sideways trend, now new uptrend coming underway. So goodbye Caterpillar, Mastech. This is an easy one. It's these prior highs here from middle of 2021. Measure that out. And those, those old highs line up almost perfectly with the pivot highs from just last week. So 122, we'll call it, if and when we're above there. And I think it's coming any day now. Show you why in a second. But if we're above there, first target is at the 161.8, about 159. And if you zoom in, right, this is just classic uptrend behavior. This is what we call continuation pattern, right? We draw this in a number of different ways, but the bottom line is we had a big leg higher from early May to early July. So 2-month up leg, then some really high and tight, short-term corrective action. Call this a continuation pattern. And we're already resolving higher. So we probably get that 122 any day now. You could probably jump this entry and be just fine.
Okay. Anyone bullish Florida real estate here? For Stock Market Mike, ticker Joe, Joe, the St. Joe Company.
What does this have to do with Florida real estate?
That's what they do. They are a developer in Florida.
Joe, what?
Joe, yeah.
St. Joe.
Yeah.
No kidding.
No kidding. They are a real estate developer. It's not a REIT, which Stock Market Mike is pointing out, but hence the paltry yield on that thing. But they are a developer and they're based in Florida, and they do like condos and hotels and that sort of thing. And so surprised you hadn't heard of it.
Joe, I like this one. I had to put this one on my list for later. This is great. I've never heard of this stock, to be completely honest.
It's relatively small. It's 3.7 billion.
Yeah, it's big enough.
Big enough.
A decent yield. Look, it's really these old highs from 2005. But zoom in here, you got a nice base that more or less completed, and we could define our risk somewhere here along the way. The highs from, 2021? No, early 22. 61, 62 bucks. That's really the level. And then if we're above there, you can play it back towards those all-time highs around 86. But interesting company, nice base.
Yeah. Okay, my mistake. I didn't miss an energy one from Wavy. BSM, which is, in my defense, not a ticker that I recognize. Blackstone Minerals.
I like the other Blackstone more, I got to tell you.
Hey, did you see that? Oh wait, I think you sent it to me actually a few months ago. Someone made that table, and on the x-axis it was like black, gray.
Yeah. How good is that?
And the y-axis was like stone, rock.
Yeah, it was like keywords that you
Right.
tend to find in investment management
Yeah.
companies.
Anyway, BSM.
Yeah, look, there's better stuff out here. Looks like some indecision on earnings is what we have here today. Really, wide range candle there. I think if you had to, you could draw some sort of a level here in the 17-ish area. But there's cleaner charts out there. This is something I was just getting involved in the other day, right? Because look how clean it is. Clean, it's a big vehicle. Schlumberger, I think it's like the largest in oil services. It's either them or Halliburton. Got a nice little high and tight coil here. Oil services have been the leaders. There's better opportunities in energy than BSM.
Okay. Wing of Tech is asking about Zebra, ZBRA. This thing is down 18% this morning. Not this morning anymore, but today. Their earnings report and they lower their guidance as well.
Yeah, you can short it.
So that's a tough one.
No, it's not. This is either you stay away on the long side or you look to get short.
Yeah. Yeah, that's true. I guess I meant that's tough if you're long, but yes, you're right.
I mean, look, there's some really good looking charts out here in their space. Zebra's, I think, a software company.
Yeah.
Some awesome looking reversal patterns. This is a waste of time and energy and looks like a lot of frustration too. So short below these pivot lows, 245. Yeah.
All right. What about everyone's favorite store, Costco? This is for Joey M.
Who was talking about Costco memberships today? I overheard.
Not me.
I didn't get in on the conversation. Was that you and Patrick talking about
Yeah.
Costco memberships?
It was definitely not.
Really? Huh.
No. I'm a member, but I wasn't talking about it.
What was you? All right, fine. Oh, it was on our meeting.
There you go.
We're talking about Costco memberships. Look, this is a great company. Here's what I like to do with certain stock charts like Costco. This is what we call a secular leader. Going back to the 1980s, I can go back 40 years more. This company, this stock just continues to move steadily higher. Sure, it has, long periods of consolidation every now and then. It looks like we're in one now. But if and when this current, little range here resolves higher, you 100% want to be looking at this as a name to buy. So I think you can jump it, not have to wait for those highs from 2022. I think 575. Yeah, the late 2021 highs. But this isn't one that you really want to overthink. They'll pay you a nice dividend. If I had to put my fundamental hat on, I could say all the nicest things in the world about this company.
Yeah.
The growth and cash flow perspective. They're also just like have not a monopoly, but an oligopoly in their space. So lots to like here.
Yeah.
Duopoly
problem.
Sam's Club. Right, Sam's Club.
Oh, I'm sorry. I forgot. I was thinking about BJ's, but yeah, I forgot about Sam's Club. What about for Scott here? He asked about CMC Commercial Metals.
Great base, really nice base. We were so patient with this one, and I'm glad we were. Good lesson. Look at a weekly first.
It's hard sometimes to wait, though.
I mean, seriously. I can show you a lot of patterns that look like this when you zoom out 15 or 20 years, depending on whether that ultimate high was .com bubble or pre-financial crisis. But, a lot of them take their sweet time to go. Look at the difference between like a Merck and a Pfizer right now, for an example of what I mean. So here we left the station late 2022, ripped into early this year, and then had a really hard throwback, right? Almost like 33% drawdown right here. But if you were to zoom out, right, it was just a really clean retest. So the market continues to tell us that these former highs from 2008 are very important. So that's coming in somewhere around the, low 40s. really the 40 to 45-ish range. I think if you're not in it already against that 40-45 zone, simple, you use the pivot highs here and define your risk there. With the strongest trends, the best looking patterns, the best looking breakouts, it's less of a matter of being perfect on your entry and exit, and more a matter of just finding a logical level and then sticking to that plan, right? Like in the strongest trends or the best patterns, you just want to get in, even if you have to bend the rules a little bit, right? So I think you can manage risk responsibly here at this 58 level, these old highs. And in terms of a target, you do targets in two ways here. I often like to measure the base. So first target 61, second 95 with the Fibonacci, or you can just measure the base out and it's somewhere about like 6 to 40. So about $34, tack that on to 40, you get about 74, 75 bucks to the upside. Right there.
Okay. Fraley asked about Altria MO. This like, and I'm not judging it all, but this to me is like classic dividend trap, is what this is.
I can't buy it. It's disgusting.
Yeah, just classic. Don't let that yield suck you in. It's a trap.
So the yield here is an astonishing 8.25%. Run from that. No, you're lucky if you get half, is what that tells you. This company traditionally pays a pretty solid premium to like the average dividend yield, but I would say an average yield for a dividend yield, like a dividend stock. So 3.5, 4 sounds more about where their yield should be. Let's check in on Philip Morris. What's the yield there? I'm sure they're dealing with.
I'm sure it's not much different.
5%. No, 5%.
Oh, wow.
Probably because they already cut or something, and I have no knowledge of. I'm not paying attention to these companies' earnings. What I will say is, well, I'm not even going to complain. I told you the thing about the vapes in Asia, right?
Yes, you did.
If you think big tobacco is powerful and obnoxious in the United States, go there. They dominate the register. Even all the like smokeless products, they have vapes that are not vapes. It's basically like a cigarette stuffed in the box and then heated really hot.
Okay.
But it's all owned by these guys.
Yeah.
No Juul.
All right.
Oh, it's a whatever.
Speaking of oligopoly, yeah, anyway, these things look pretty rough. Okay. James Burns. He's asking Palantir, should I sell if I'm holding? James, I'm not you. Steve's not you. We can't tell you what to do.
Have you sold any yet? You don't. It doesn't always have to be like a sell or not sell.
That's true.
You could always sell some.
But also like
Spencer said, can't tell you what to do. Don't want to tell you what to do.
Yeah, please don't do something based on what we like, based on someone else telling you to do it, right? Do it because you want to do it.
As JC likes to say and remind us, like my risk preferences are going to vary in big ways from people, right? So I'm just up here talking about.
Now that being said, this is pretty wild though. This move,
crazy. So listen, this one we could draw in a number of different ways. This is a weekly chart, believe it or not. This thing just relentless bid here. I have the AVWAP here anchored from the all-time highs. So way back in early 2021, which is when the most speculative growth stocks peaked. Now, would have looked at this pattern, something like that. So we got this reversal pattern resolution 100% ago, around $10 in mid-May. So 2.5 months later, we've doubled. You want to be very aware of where something has come from, right? Especially when you're trying to forecast or make some sort of call about where it's going. Palantir has come a long way in a very short period of time. We did have a little coil here, some corrective and continuation action. Now it looks like we're in the next leg up. Who knows? This could end here. It could end 4 or 5 points higher, around 25. If and when it does, what you want to do if you're looking to get into or out of the stock, sell it there. This is what you would do as a trader. You would sell it there when the continuation pattern begins. And if you're looking to enter, you would enter it there when the continuation pattern completes and resolves ideally higher. That's how you would manage something like this as a trader? Because, I mean, this is really tough because it's moving so fast.
Yeah, for sure. Okay, we got time for like a couple more. Not gonna get to all these today, so you have to come back on Thursday. Okay, let's give Joey a shout out. Joey wants to short. He wants to short RHI. He wants to short RHI. They had earnings on Tuesday night. A week ago. They had earnings.
I think I saw a comment about this on Twitter. I wonder if it was Joey. About how like temp work is in a bear market, or like I would have thought like with the fractioning of the job market with the new economy, like people are doing little jobs here and there. I would have thought temp work would be on the rise. I don't know.
I would think this is inversely correlated with the unemployment number, right? Unemployment is low. No, correlated. I mean, if unemployment is low, then temp work should be low. No.
Yeah, you're right. Companies are far more likely to employ temp workers in an environment marked by uncertainty, right?
Right. I don't know.
Yeah, listen, regardless, I think the point, if you've ever dealt with Robert Half, I don't think people are going to be going there in the future to find jobs. Do you know what I'm saying, Spencer? Like
I've never dealt with Robert Half. Yeah.
This is a very traditional, old school, like recruiter type of employment shop. Yeah, this probably is a short. But I don't think you want to be looking to short things in this environment, right? This could very easily fail down here at the lower bounds, reverse higher. Listen, this could run all the way back to the mid upper 80s and still be stuck in the range. So, I think shorting is tough here.
Okay. And then just to wrap it up, Troy asked about Disney. I'm starting to think now that I'm never making my money in Disney back, only because I have this idea in my head that they're going to get taken over by like Apple or something for like, I don't know.
Stop. Big buy. No one wants to buy a company this big.
No. Obviously, first they're going to spin off some stuff. First, they have to spin off ESPN and ABC and get out of the cable business. And then once they do that, then they're ripe for a takeover. But regardless, I'm so underwater in this thing that it's not even worth.
If this, I'm going to go easy on you here, but the whole thesis there is what's going on. Look at just follow price. First of all, if they're spinning things off, if that's your investment thesis,
no, that's not my thesis.
Because they're eventually going to spin things.
That's not my thesis. That was not my thesis when I bought it, but that's my thesis now.
Oh, once you became a bag holder, you started making all the excuses.
I don't think that's a good if they get bought for like 120, like I'm not making money on this, right?
All joking aside, like this has to be pretty cheap by now. So there's no dividend. What's the PE multiple on Disney at this point?
Okay.
Low teens. It's got to be low teens.
I don't know. I was going to say 10. Let's see. 16 on a forward basis?
Because, dude, this is typically a mid to upper 20s multiple stock. Right. Well, it's a company that traditionally like has experienced a degree of growth for its size. But things have gotten rough. And I think too much of their business right now, or at least too much of the stock price, is invested in the streaming.
Yeah. Right? And cable's a dying industry, and they have a lot of cable exposure. They own ABC, they own ESPN. Not great.
From the beginning of time, for as long as I've been old enough to pay attention to what people are saying about Disney stock, they've been complaining about ESPN. Right? This is not
no, they stopped though. They stopped for a little bit though, because of Disney Plus.
Okay.
It was a nice distraction, but now we're back.
Right. Like 10 years ago, the bear case on Disney was ESPN.
Yes, it was.
So forget all that. But I do think streaming is a real tough business or space to be in. Never been a big fan of Netflix for that reason. I don't know. And aren't all their movies flopping too?
Maybe not. I don't know.
This one's simple, right? You got a real clean level here. Again, in this kind of a bull market, definitely don't want to be looking for stocks to short. If I did, this would be a great candidate. But I think you could play it for some mean reversion, play it for some catch up. There's an old strategy called the dogs of the Dow.
Oh yeah.
I beat up Dow stocks. Really, it's by the high dividend yielding ones. Didn't Disney used to pay a dividend? Did they cut the whole thing off?
They cut it.
like
No. They suspended it. There's a difference. I think they suspended it.
wouldn't want to be Bob Iger. Listen, if
No.
we're above, the upper 80s here, these pivot lows, call it 85. I think you could be long Disney. Fine.
Yeah.
Fine, Spencer.
It was suspended, and then they never brought it back. Anyway, okay. Oh, they did say. I'm sorry. They said in February of this year. Yeah, they're going to reinstate it by the end of the calendar year. Okay, cool. Anyway, all right. That's our show for the day. I know there was like 15 tickers, 20 tickers more in the chat we didn't get to. I apologize. We'll have to come back on Thursday for our next show. We're live every Tuesday and Thursday at 1 o'clock Eastern time right here on Stock Market TV. If you want to, do us a solid, hit that like button, subscribe to the channel. We'd appreciate that. If you want to cut the line in the chat, email us questions at stockmarketmedia.com. I look at that email. I write every ticker down that we get. So I try our best to cover all of those before we get to the chat. Hope you guys had fun. Hope you guys learned something. I always do. Steve, always a pleasure. Everyone have a good day. Go take a nap.
All right, later, Spencer.